The US dollar, of course, is where I start my analysis every morning. You know, we start our analysis here in the chat with this particular chart. And I'm going to take a look at two time frames in particular because I want to compare what we're seeing on each one of them, because I think there's some really big issues that we're going to have to deal with as we close out 2008, and I think they're going to fall squarely on the shoulders of the dollar index chart. And when you take a look at this dollar index, it's really easy to see, and I'm going to squeeze in some more data so we can get a full complement of lazy days lines here. But I think it's really easy to see that this range, and again, this is a 30-minute chart, this range continues to narrow. Now, remember, I'm not trying to be focused only on the US market. I think a lot of people just simply don't know or forget that most of the action in the Forex is based upon the US dollar, only because if you want to consider your 6 most traded pairs, fiber, cable, Swissy, dollar yen, Canada, Aussie, okay, your dollar correlated majors and your ComDolls all have one thing in common, and that is the US dollar, which is why the US dollar in many ways is the most important confirmation chart, directional chart for the overall Forex market. That does not mean that I'm going to use the dollar index to set up trades specifically for those markets, but I'm certainly going to understand, get a better look at where the market's heading based upon strength or weakness of the dollar. So it's important, it's imperative that we understand the relationship, and we talk about that here each and every week, but we'll definitely talk about that for the presentation on Thursday. And again, I hope you all can join me. So what do I have here? Well, let's break it down. The analysis steps that we're gonna do here with the 30-minute charts, the same analysis steps we're gonna do for the daily chart. What's the market cycle? That's number one. I mean, that's absolutely positively number one. What's the market cycle? I do nothing else until I determine that. And if I can't get a clear-cut market cycle reading out of this particular time frame, I'll move on to another time frame. Remember, it is time frame specific. If someone asks me, what's the cable doing? I'm going to say, well, which time frame? Well, what's the dollar yen doing? Again, which time frame? Because an intraday short-term time frame could be doing something completely different directionally as compared to, say, a daily chart or a 240-minute chart. Okay, so that's number one. Number two, once I determine what the market cycle is, then I'm going to determine, based upon that, my entry style. Okay, determining the entry style is going to be 100% done by looking at the trend or lack of trend. Okay, looking at the direction of the market, period. So if we just take those first two steps here of analysis, and I'm going to do what really kind of comes before that, the prep work, if you will, which is for a 30-minute chart, what's my look back? You know, what is the amount of data that I need on this chart in order to understand fully what the psychological relevance is of prior rallies and sell-offs, highs and lows, last major moves. Well, for a 30-minute chart, about 2 weeks will do, and that's about what we're looking at here, just over 2 weeks. So 2 weeks, 2 calendar weeks is about what we need to get an idea of what the 30-minute chart has been doing. It's market memory. It's psychologically relevant. 3 months is not the memory of a 30-minute chart. I'm not looking to find 52-week highs and lows off a 30-minute chart. A 30-minute chart's relevance as far as where traders can recall it's been, the trend lines that I'm going to draw as far as how far back I'm going to look for touch points, it's all within about 2 weeks. No less than a week, and really not much more than 2 weeks. Same thing goes for a 60-minute chart. So I squeeze in those 2 weeks and I draw my trend lines. Now, if I start adding too much data, number one, it gets difficult to look at. And number two, I'm probably going to start looking at a little bit less relevant data. Maybe end up looking at data that probably is not going to be reacted to in a consistent or predictable manner. Here I just drew in a little uptrend because the overall market has been heading higher, although it's stalled as of recently, which is particularly evident by the downtrend here and the uptrend here. We're coming into a squeeze, aren't we? That squeeze, that limitation of the market to make either lower lows or higher highs, it just kind of sitting in this range, is what has made the wave, the three lines in my wave here, the 34 period exponential moving average, move sideways. My market cycle is accumulation or distribution. I'd probably call this accumulation since it's getting rather tight. By that I mean you can see that the range continues to narrow, and therefore when I get this quieter range, I'm going to call that accumulation versus the more volatile range that we'd call distribution. So that's a breakdown here of the 30-minute chart. Let's go ahead and take a look at the daily chart.